North American markets pretty steady today after the central bank announcements in Canada and the U.S. Let's go to Lesley Marks on this, Chief Investment Officer at Mackenzie Investments. Thanks for joining us today.
Nice to be here, Marella.
So not a lot of reaction to the announcement from the Bank of Canada. Let's start there. That's because it was widely expected. Is that what you're thinking?
That's right. I think that everybody has a very good sense that the Bank of Canada is in a bit of a wait and see mode right now. We had lots of easing, and that was the story in 2025. And now the Bank of Canada wants to see that play through in the Canadian economy, while recognizing in Governor Macklem's comments today that we are in a period of great uncertainty in 2026. So they're keeping their powder dry for the potential if they need to cut rates if the outlook for growth deteriorates further.
Okay, so they want to keep their powder dry, as you say, in case they need to pivot later. Is that biggest uncertainty the overhang of CUSMA or Washington in general?
Well, I think you can't talk about those things independently. They're actually very intertwined. But I think for Canadians, the primary impact on our economy will be a change in the calculus or the outcome from the current agreement that we have under CUSMA. So that would be the major factor that investors would be handicapping. And that's what Governor Macklem implied. I guess the other thing I would observe is that in the monetary policy report, we did see generally a pretty significant downtick in expectations for economic growth in Canada this year compared with last year. And that's before we factor in any changes that could come as a result of the renegotiation.
Did that concern you? It's a growth estimate of 1.1% and unemployment is still high.
Well, I think, again, to your initial question, I think that isn't really a surprise to Canadians. You know, we're really feeling it. We get fairly timely data when it comes to the jobs numbers. And I think that's why the market didn't really get sort of caught off guard or surprised by that downtick in expectations. I think we have a good sense that the Canadian economy is slowing, that a change in immigration policy is certainly going to impact the Canadian economy, and that most of the decisions that are being talked about by our federal government today will take a few years to play out and see impact on growth. So we're investing now for growth down the road, but the immediate impact won't be seen probably in 2026.
Okay. We've seen a broadening out of the market from late last year, continuing today. Do you think that pattern will continue?
Well, we're so happy to see that broadening out in the market. That was a key tenet of our outlook for markets. The market had become very narrow and very focused on these AI-driven plays. We have been very happy to see that the things that are driving market returns now, not just in Canada, but globally, are things like the materials sector. Obviously, the strength in gold and silver and copper prices is driving that sector. We've also seen just a general move in towards more value-oriented sectors, more cyclically driven sectors, and that's been really good. So it's no longer just a few narrow technology names driving the market, and that's a much healthier place to be. I guess the last point I would make is we're also seeing small caps performing and participating in the market. So again, a healthier equity market for investors.
Okay, you mentioned big tech, of course, which was the big driver of the last number of years. We're having earnings results from at least 3 of them today and over the next month. How much do you think that'll shift things? Or do you think that part of their story where they were the market drivers has now moved on?
Well, I think that, you know, last year, the focus when we saw these companies report was very much top line oriented. It was that beating on revenue and even bottom line EPS. There was very little sort of focus on the lines in between. So it was really about earnings momentum and beating. I think where things have changed and why we've seen these companies pretty much stall out when it comes to that price momentum is because the focus now is very much on CapEx, capital expenditure. And the fact that these very high cash flow or free cash flow businesses are now having to spend more and invest more. And I think that this week, when we see the earnings of these large companies like Microsoft or Meta, the focus is going to be much more on expenditures for capital and what the expected return is on that capital investment.
Got it. Lesley Marks, thanks for joining us. Appreciate it.